night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today we're going to jump back into the world of the Bitcoin miners. So we're going to start off, we're going to look at a bunch of different metrics, charts, as well as my own comparison tracker, just to get a little comparison of the miners in a peer-to-peer kind of standpoint there. So we're going to just jump right into things here. First off, we're taking a look at the Bitcoin network hash rate. So this is the overall hash rate, basically made up of all the miners currently kind of participating in the network. This is going to be important because we do need to kind of keep track of the network share that our miners have. The more network share they have, the more rewards they're going to get, assuming that they do actually excel within their efficiency and uptime. So it's just an interesting metric to follow. We can essentially see that it's just ranging here between about 700 exahash per second up to about 950, even up to almost 1,000 in a couple instances here. But ultimately, yeah, it just goes through these fluctuations. So when we see an increase in difficulty here, especially for if it continues to go up, we can expect maybe the miner rewards to be a little bit less than the prior month, just due to that increase in difficulty here. So nice little uptick, you know. We'll see. It's probably not going to be sustainable. There are a lot of factors that kind of influence whether or not it makes financial sense to actually be mining Bitcoin. Certain companies can mine it for a lot cheaper than other companies, and there are variable factors that kind of affect the hash rate there. So it's just something to pay attention to. We do see it continuing to rise here. If we look at the all-time hash rate, so this is essentially, and kind of there is some speculation that the price and hash rate do kind of follow each other somewhat in a certain sense. Obviously, we're not going to put a ton of weight into that theory. They're all just theories at the end of the day, and we just focus on the charts, the data. But we do see hash rate continuing to climb up and to the right. We're going to take a look over here at our Into the Cryptoverse site. So I've mentioned this before. If you don't have an account, come here, sign up for at least the free account, and get access to the free data. You know, it doesn't, yeah, it's free data, useful data. You might as well take advantage of it. So just come here, get that free account, check it out, use the tools, look at the data, and try to get a better idea of what's going on in the markets here. So this is the Bitcoin hash ribbons. Essentially, you can see that every time we started going above this line here, so we went up the orange line, that kind of marked the peaks of the cycle here. So similarly here, when the hash ribbons are above this neutral line, that's when it starts to be a little bit more overheated. And then when we drop below there, so you see right in this instance, we drop below, and then same all through here. It seems to correspond with market correction. So we see kind of the bottoms corresponding with the negative values, and the tops or the peaks corresponding with more positive values. So we can see, if we zoom into the current cycle here, just get a better idea of what's going on. We did actually see kind of it really spike up, meeting those peak levels here. We are kind of in that downtrend heading towards that neutral line, so we need to watch this. If we start to break below it, and that could be indicative of, you know, a confirmation of that continued downtrend. You can see essentially when this does bottom, it kind of does do a good job of picking the Pico bottom, so the local low. So that's something we're going to want to watch here. Look for that bottom structure on the hash ribbons, but for now it's kind of trending down and looks like it's heading back towards kind of that neutral territory, so we need to continue watching that. We're going to look at hash rate divided by price here. So essentially, you can kind of see in the prior Bitcoin cycles that the hash rate goes on these divergences with the Bitcoin price. So we can see up through here, hash rate climbing beyond the peaks, diverging. You can see by the time that the Bitcoin price catches up with the hash rate right here, that actually marked the market cycle top. So right through here, market cycle top. Here we diverged and converged, market cycle top. We diverged and we've converged again. So this is actually a potential market cycle top if we're basing it off of historic examples here. So that's something we do need to pay attention to. While certain indicators might not have flashed, this is a potential cycle top indicator, more specific to the actual miners, that looks like it actually has kind of triggered here. So we'll need to see, you know, it does look like it's going on a bit of a push back above. So maybe we do get that another extension kind of off of here. That being said, once we did kind of converge, we went into that significant downtrend. So just watching that, and we'll see what happens kind of going forward. We can take a look at our miner outflow divided by miner revenue, just another metric we can use to gauge kind of what the miners are thinking. So generally when they are selling, when we see increases in these peaks right here, it just means that they're feeling kind of bearish, they're feeling the pressures of the market, they start unloading Bitcoin more so than stacking it. So kind of this cycle here, we did see a major uptick in that right now. So we saw miners getting really bearish up here, de-risking a lot, and then we've already seen some weakness in the market. So we will continue following this one as well. But moving on, looking at the Bitcoin miner supply flow to net to exchanges, we can see essentially the prior cycle peaks kind of lined up when Bitcoin miners were moving a lot of Bitcoin to the exchanges to sell. Obviously, they don't want to hold through a bear market. They want to take advantage of the price appreciation, sell at a high price so then they can get the most capital out of their investment to reinvest into the mining business. That's what CleanSpark did a really good job of last cycle. While other miners were just, everyone was trying to hodl, hold on for dear life if you don't know the acronym there. But essentially all these companies stacking as much Bitcoin as they could, even buying it at higher prices, ultimately for the market to break down, go into that bear market, and it even caused some companies to actually sell the Bitcoin they had bought or mined at a loss when they could have just sold it and taken the profits when they had it. So we've seen companies with mixed strategies this market cycle so far. There's a lot of companies that are adopting a hodl strategy, and there's a lot of companies that are selling all the Bitcoin they mine as it comes in to fund their expansion or to fund their other endeavors into things like AI, HPC. But just interesting to note, we haven't seen the same inflow to the exchanges that we've seen in the prior market cycle peaks, seen through here, seen kind of through here, as well as seen through here back in 2014-15. So just watching that as well, kind of looking, and you can kind of gauge certain indicators look a little toppy and certain ones don't. So we have to kind of look at all of them, put them together, and then get a good picture of what's going on. So also we can take a look at the Bitcoin realized market capitalization divided by thermal capitalization. So another good visualization when it does reach these extensions and curl over, that does usually mark a market cycle peak. So we've reached here. We are starting to curl over, so that is a potential sign of a peak. I know it hasn't reached the same extension as prior levels here, but that being said, it doesn't necessarily have to, in my opinion, and assuming that it has to is just kind of asking for trouble. If the charts tell us things are weak and they're in a downtrend, then we listen to the charts, and these indicators don't also always have to kind of rhyme exactly or repeat, so it's just something we pay attention to. And we just notice every time it curled over, even if we got a little bump afterwards, it essentially marked the peak, and then ultimately going into that bear market. So this is a potential peak. We will see if we get another push up, another lower high potential like we got over here in this cycle. Otherwise, we're just going to continue watching this one closely as well. All these metrics very important, really useful to kind of gauge what's going on with the Bitcoin miners. The miners do play a major role in market dynamics, so it is important to pay attention to them, in my opinion. We'll flip over to my Bitcoin miner comparison document here. So we're just looking at kind of, the first thing is going to be the monthly production of Bitcoin. So we're looking at the number of Bitcoin mined as well as their Bitcoin mined per exahash. So that's going to tell you how efficient they are with their, how efficient they are in terms of mining that Bitcoin. A higher number, obviously better. So if they're marked red in terms of Bitcoin production, that just means they weren't able to beat the prior month. If it's yellow, they got really close, and if it's green, they actually were able to surpass the prior month's production numbers. And then same thing with the Bitcoin mined per exahash. It's more based on kind of, if they're green, they're top of the class in terms of relative to their peers. If they're yellow, they're kind of middle of the pack, and if they're red, they're just underperforming the average of the pack. So here we see Marathon, the big dog, coming in with 706 Bitcoin this month, so less than the previous 750, and also less Bitcoin mined per exahash, so less efficient, less production. That could also be due to the increase in network difficulty. That does happen. We see CleanSpark coming in here, 624, so 2 Bitcoin shy of their prior month's target, despite only adding 0.1 exahash from the prior month. So really good job. We see a nice 15.33 Bitcoin mined per exahash, a little bit less than the prior month, but still kind of in that top category with some of the best, most efficient miners. We see Riot here coming in with 470, so less than the 527 of the previous month, and a big kind of drop here in Bitcoin mined mine per exahash. So yeah, Riot's interesting. They aren't the most consistent when it comes to production and efficiency. It's one of the things I kind of don't really like about them. They are exploring a lot more AI HPC opportunities going forward, so that is something we need to factor in. We see Core Scientific here, 215, so less than the 256 prior, and again, a big drop in Bitcoin mined per exahash. Core Scientific, another major AI player, will likely keep transitioning from Bitcoin mining. I figure they're going to ultimately end up becoming a more majority based around AI HPC. Looking at Iris Energy, 459, so less than the prior month. Still, Bitcoin mined per exahash also down a decent amount, but that being said, they're still just shy of that kind of top percentile for the miners. We see Hive, 89, less than the 102, coming in at 13.9, middle of the pack in terms of efficiency. Bitfarms actually exceeding the prior month's production, which was really actually interesting, and kind of good job to them for really doing that. They maintained the same amount of efficiency, but increasing their hash rate a little bit. They're able to get a few more rewards. So hopefully we continue to see Bitfarms really able to scale their mining production there, and kind of they really need to meet those growth targets. It's been 2 years that they've missed their growth targets in a row, so if I really need to see them executing on these strategies. It just doesn't bode well for management to be making these promises and under delivering, while other companies are under promising and over delivering. So just following that, we see Cypher coming in with 180, also less than the prior month, quite a bit less in terms of efficiency. Hut coming in with 46, also less, and quite a big difference in efficiency here, coming in at the bottom of the pack in terms of efficiency. And then DMGI, a little bit less than their prior month, but they were pretty close, within 4 Bitcoin. That being said, efficiency still the top in terms of all the miners here, but it is a little bit less than the prior month. So a bit of a change in terms of efficiency for all the miners in terms of last month. If we scroll down here, we'll take a look. This is the production growth. So this is focusing on a lot of the production fundamentals of the companies. We can see here hash rate, just measuring them based on the size of hash rate they have. So the bigger hash rate companies, the bigger miners, they're green. Those are the large scale. The mid caps or the mid scale miners I consider yellow, and kind of the smaller cap miners I consider in the red here. So red doesn't, again, I've said it before, it doesn't necessarily mean that it's bad or bearish. It just means that in comparison, it's just how they kind of stack and compare. There are certain metrics where you want to see more green and less red, but in terms of like share price, it just, or in terms of hash rate, it just means that they're a smaller miner. You know, if they're an efficient and strong miner, it doesn't matter how small or how big they are. All that matters is the bottom line at the end of the day. So that's what we pay attention to. Here we see the total of these miners that I follow. We're looking at 231 exahash total, or about a 25% share in the network. So we can see here the respective network shares, and so roughly you're looking at each company gaining about this percentage of the rewards. You know, probably looking at 90% of this number, because you do have to factor in kind of the uptime. It's rare for a company to be able to sustain near 100% uptime repeatedly month after month. Also looking here, we can see efficiency. So this is one of the ones where you want to pay attention to the actual color of the number. So we see Marathon, Core Scientific, Hut 8, and Bit Digital all quite high here in terms of joules per terahash for efficiency. That just means their cost to mine is going to be substantially higher, because that efficiency is a lot higher, or a lot lower. They have older rigs, they need to upgrade to new ones, so that's what we're looking for there. You see in the middle of the pack, we've got Riot, Hive, Bitfarms, and DMGI, and then leading the pack, we've got Iris Energy at 15, we've got CleanSpark behind them, just sub 17 joules per terahash. We've got Wolf here at 19, and we've got Cypher here at 18.9 as well. So the best performers for that one are CleanSpark, Iris Energy, Wolf, and Cypher. Looking at Bitcoin HODL, here, obviously, Marathon with the massive lead, 46,373 Bitcoin. CleanSpark coming in at 11,177. So they're actually able to surpass Hut, which is pretty impressive considering I think Hut started the year, you know, with like 8,000 or 9,000 Bitcoin, whereas CleanSpark started the year with about 3,000 Bitcoin. So for them to be able to catch up and surpass that amount, that's a really good job. And they're actually even closing the gap on Riot. I know Riot's still still has a decent amount, but really CleanSpark's done an amazing job at stacking that Bitcoin and not having to sell. Although I do think they will sell if it makes strategic sense, just as they did last cycle, so we're just following that. I think it makes more sense to strategically sell your Bitcoin throughout the cycle and invest that money into the actual underlying mining business, as opposed to just kind of hoping that the price is going to continue going up forever. We all know what happens in the bear markets. They're brutal. They're tough for miners. You know, you want to be well capitalized to take advantage of the opportunities then. Same as us as investors. We want to sell our Bitcoin high in the bull market so that we can buy more in the bear market. It's the same for miners. They want to sell their Bitcoin high so they can buy more rigs. During the bull market, the price of Bitcoin mining machines goes up and the price of Bitcoin goes up as well. And then in the bear markets, everything comes kind of crashing back to reality. People aren't paying the same premiums they were before, and then companies are able to take advantage of it. So we see Riot here coming in just shy of 18,700 Bitcoin, 0 for Core Scientific, Iris Energy, and Wolf. Hive here coming in with 2,620. So a really good number here for a small cap miner. We see Bitfarms with 1,260, Cypher with 1,032, Hut with 10,237, so another large holder right through here. We see Bit Digital here at 1,584 equivalent, so they hold a mix of Ethereum and Bitcoin, and they stake a lot of Ethereum as well. So I just take the Bitcoin equivalent of that Ethereum and Bitcoin combined just to get a good easy comparison here. And then DMGI holding 443 Bitcoin. So another really good kind of amount of Bitcoin to be holding for such a small company here. Moving on, we see their energy under management. So the green is the large scale, yellow is mid scale, and red is small scale. So our largest here are Mara, CleanSpark, Riot. We've got Core Scientific, Iris Energy, Bitfarms, and Hut kind of in the middle here. And then we've got Wolf, Hive, and Bit Digital and DMGI kind of on the lower scale side of things. This is the energy pipeline that they have, so kind of what they have in terms of potential development. One thing to note for CleanSpark, they don't really promise that they're, you know, a lot of these things, they're kind of factoring in land that's just not been developed whatsoever and saying it has the potential for this amount of megawatts. CleanSpark just doesn't really focus on that. They're just going to, they kind of acquire data centers on a turnkey style if possible. So just following along, we're not going to see them promising, you know, we're going to be 2 gigawatts or we're going to be 3 gigawatts by this time, whatever year. So that is just another kind of falls into that category of just keeping promises kind of a little bit more sustainable, a little bit more conservative, and then really excelling and outperforming on what they've promised. So looking at also the prior hash rate growth, we can see Mara here, CleanSpark, and Iris Energy, the two notable ones here. Riot coming in a little bit behind, and then Marathon, with some of the other miners, you know, some even losing a lot of hash rate. Here's if they've exceeded the prior year hash rate target. I want to know that my companies are going to actually excel and exceed on their growth strategies. I don't care if they're promising me the world, if they're going to deliver me nothing in the end. I want them to underpromise and outperform, or I want them to just meet their goals. That's all they have to do is meet their targets, even coming within a reasonable margin of their targets. I'm not going to be mad. I do understand there are bottlenecks, there are delays that can occur during development of these data centers. So it just needs to be really clear and concise, and yeah, just conservative enough, but also aggressive enough to be realistic. So we have also see 2025 revenue estimates here, looking at kind of the total revenue estimate for the miners together, looking at $5.3 billion in 2025. Also we see, looking here at the 2025 revenue divided by market cap. So I took an average of this. So we took the total revenue expected for the miners for 2025. We took their total market caps and we divided it. And then we got this as the base number for the 2025 revenue divided by market cap. So anything above this just shows that they're being a little more undervalued, right? Essentially, like you're getting more revenue per dollar of market cap. And then alternatively, we see kind of in the red here, so you're just getting a little bit less value per dollar of market cap cap in HUT, but looking pretty good across the board. Either most miners kind of fitting in the middle there around that average, some outperforming like CleanSpark, Iris Energy, Bitfarms doing really well, DMGI looking really good on this metric, and BTBT also looking really good here. We see their non-Bitcoin mining yearly revenue, so looking at that, obviously Bit Digital kind of really blown everyone else out of the water due to their AI HPC strategy. Flipping down, we'll take a look at our share price metrics here. So looking at kind of our market caps and then our enterprise values. Ideally, you do want to see the enterprise value exceeding the market cap. Essentially, that means they hold more in assets than what the company's being valued at currently. So in terms of that, we see Marathon, we see Core Scientific, we see TeraWolf, we see Cypher, we see DMGI, all kind of exceeding their market caps. And then we see in the middle of the pack right here, CleanSpark, Riot, we see Hive, we see Bitfarms, and we see Bit Digital, all really close to that market cap with that enterprise value. For companies like CleanSpark and Riot, it did actually exceed it with Bitcoin at a higher price, but after the drop in the price of Bitcoin, it's kind of lowered the enterprise value. So we are a little bit below here. That being said, you get a lot of value in the enterprise based on the actual current market valuation. So it kind of doesn't, excuse me, moving on. Looking at outstanding shares, ideally the less outstanding shares the better, but miners are going to dilute because it's an easy, quick access to capital. You know, they don't have to pay a ton of interest on it, so we will continue to see them as long as they're using those funds accretively. So that's what I said, what I have down here. I have the amount that they diluted in 2024, and then if it was accretive or not. So if their growth was able to outpace the amount of dilution, I consider that accretive. So just paying attention to that, but we do see just something we do want to pay attention to. The more shares outstanding, kind of the more ability for shorts to actually be able to take advantage of those shares and involve in some market manipulation practices. So it is important. We want a lower share count if possible. We see their Bitcoin HODL value in terms of millions. So this is $3.8 billion, almost $3.9 billion that Mara has in Bitcoin, and they've got $392 million in cash. Same going across the board, we can see looking at this. So basically we're going to take the combined Bitcoin HODL value as well as the cash and equivalents, and we're going to divide that by the market cap. That's going to give us a liquidity to market cap ratio. So that tells you how much of the market cap the company is holding in liquid assets like cash and Bitcoin. So the big notable one right here is Marathon at 95.61%. So 95% of Marathon's market cap is made up of their Bitcoin and their cash. So that's not even factoring the additional business that's 53.7 exahash of mining and equipment. So that's why their enterprise value is so high. Looking at some other notable ones here, DMGI at 90%, because yeah, they hold a lot of Bitcoin relative to such a low market cap at only $55 million of a market cap here, and that 440 Bitcoin that they hold. We also see Riot here at 73%, another really good one up there. And then coming in the middle of the pack, we see CleanSpark, we see Hive, and we see Bit Digital, all holding substantial amounts of liquidity relative to their market cap. And then going down, kind of some of the smaller ones here, HUT, Cypher, Bitfarms, Wolf, Iris Energy, and Cores, a little bit less. Looking at current ratio, so this is the ability for companies to pay off their short-term debts and liabilities with their current assets. The bigger the number, the better it is. It's just more freedom and more ability, more liquidity to cover those liabilities. So top of the pack, we've got CleanSpark, we've got Hive, and we've got Core Scientific over here. So Core Scientific just making it kind of in there. I included them because it is a little bit better than some of the other peers. Middle of the pack, we've got Marathon, Riot, we've got Wolf, we've got Bitfarms, we've got Bit Digital, and we've got DMGI here. Looking at our price to book ratio, so another way we can kind of tell if a company is more or less undervalued relative to its peers. The lower number is going to be more undervalued. A number of about 1 is kind of equally valued, and then anything more, they're being overvalued. So we see Undervalued companies, looking at Riot currently, Hive, and DMGI. Looking at kind of fairly valued in terms of price to book, we've got Marathon, CleanSpark, Iris Energy, Bitfarms, Cypher kind of just squeaking in there, I'd say, Hut and Bit Digital, and then kind of being more overvalued here, we've got Wolf. There isn't a price to book ratio due to the accounting standards of Core Scientific right now, so that's something we'll just continue following. Looking at debt to equity ratio, obviously we want debt to equity to be a little bit lower if possible. So Marathon, although it's such a high liquidity to market cap and enterprise value to market cap, they do have a pretty large debt to equity ratio compared to other peers. So looking at them, kind of the worst, them, Wolf, and Core Scientific here, looking a little bit more concerning. That being said, you know, they do have that large enterprise value exceeding their market cap. You know, they're very well capitalized, and they do have a pretty good current ratio able to cover those debts and liabilities. Looking at EV divided by revenue. So again, just another metric that we can kind of gauge how they're valued against their peers. So looking at Wolf and Marathon here, currently being more overvalued for their enterprise value divided by their exahash, or sorry, their enterprise value divided by their revenue. My mistake. We see in the middle of the pack we've got Riot, Core Scientific, Iris Energy, and Cypher, and then in the top of the pack we've got DMGI, Bit Digital, Hut, we've got Bitfarms, Hive, and we've got CleanSpark, all doing pretty well in that regard. I'm looking at EV divided by hash rate, and then in terms of dollars here, so we see Marathon being valued at, sorry, that number is not correct. That needs to be yellow. I'll just flip that right now. We see CleanSpark being undervalued here. We see Iris Energy, we see Hive, we see Bitfarms, and we see DMGI, all being more undervalued relative to their peers. Middle of the pack, we've got Marathon, Riot, and we've got Cypher, and then more overvalued currently, we've got Core Scientific, Wolf, Hut, and actually Bit Digital right now. So all the major AI players are kind of being a little more overvalued. Looking at market cap divided by exahash minus their HODL, another kind of just comparison against peers. So Marathon coming in also needs to be changed here. Sorry, some of these colors are a little off. Yeah, so middle of the pack, more overvalued, middle of the pack, more overvalued. The most notable one here is DMGI. Sorry, excuse me. So we do see that DMGI as a small scale miner is being more valued, kind of undervalued compared to the other miners. So it is something to pay attention to. There's a lot less liquidity, a lot less institutional investment in that company, so it doesn't garnish a lot of hype. It's only available on Canadian exchanges or OTC as far as I know, so less access to liquidity in terms of US or other investors. Looking here, same thing, we just see institutional ownership across the board. You want to see high institutional ownership ideally, and then we've got analyst price targets kind of looking here at an average price target just to gauge the potential upside. So we're going to flip over to the actual chart here, take a quick look at the Bitcoin miners. So what I want to show you first is we're looking at our momentum indicators. So we see essentially we've come down, we're putting in, we're below neutral, heading towards that oversold nature down here by 30, but we're curling over a little bit, but still just that downwards price action. We see the orange DMI line is still on top of that red ADX line, so we do still have bearish momentum on the weekly chart. MACD coming down, RSI continuing to come down. The short-term bubble risk actually entering this deep blue territory, which it hasn't really done to this extent since back here right near the bear market bottom. So interesting to note. We'll continue following that. We'll flip to the daily chart real quick because the indicators might look a little bit different here. So here we had our bullish cross, bounce off support, and we're continued up. We're getting that bullish cross potential on the MACD. Looking here, it's kind of neutral on the DMI, so a little bit of the bearish momentum kind of losing its steam here. Hopefully we see a cross and we start to see the blue DMI positive line curling up towards that orange line. We do see here pretty oversold on the short-term bubble risk. So I'll just take a look here at the chart itself, get an idea of what's going on. So if we take a look going back just to the bear market lows here, we can see on the daily chart we had this huge buy candle right here on these lows. So a big buyers stepping in, but not really a lot of follow through yet. So we still see some selling pressure after that. But if we look, essentially we've just been following up this trend line. We are at risk of losing this trend line right now, although we did bounce from this horizontal support. So we're stuck under the VRVP point of control. That's the biggest volume bar in this profile here. So we did see other similar times where we kind of came and we saw this lower low happen on the price action, followed, and then we had our bearish cross here. We were able to get back above and then go on another leg up. So that's what I'm watching for here. We had that lower low on the price action. We had our bearish cross. So now we need to see price, it could come up, tag the 200-day moving average, come back, bounce, and then continue up from there. That's going to be the most bullish case scenario. We do need to pay attention to the price action here. So either something like this is going to happen, come up, retest these moving averages, come back, retest the VRVP here, and then we're going to be able to try and continue that trend up from there. Alternatively, we could see a rejection from this trend line we're currently at right now. If we see that and we go to these lower lows, we could be due for that downtrend price action. So this is going to kind of be my left translated cycle, top is in, no new highs scenario. This is going to be kind of my traditional cycle is going to continue playing out scenario. So we really need to wait and see what happens. I'm not interested in taking a position right here. That's that kind of no man's land territory that I talk about, sitting on your hands, waiting for the confirmation. We see either price is going to break back out and come back and retest with higher low structure, or it's going to break down, put in a new low, likely come up and reject here, maybe something like this on this downsloping trend line, and then continue that to the downside. So we just watch the price action, we watch the indicators, and they give us an idea of what the most likely path is. We're going to flip over to the individual miners. I'm not going to look at too many momentum indicators because they're all going to look very similar to what I just showed you on WGMI. I just want to show you kind of the accumulation ranges that I am looking at for each miners. I've talked about it in prior videos, but important to just touch on it again. We see Mara coming in here, holding this low on the double bottom. So we want to see that continued strength up. Hopefully we can get above this trend line, but a nice accumulation range for Marathon. You'd be looking sub $10. Even right now, from the cycle low to high, we're in the middle of that Fibonacci golden zone. So if you think the lows are in and you think we're going to reverse from here, this isn't a bad time to be DCAing into some of these names. $13 for Marathon, considering the amount of value you get in the Bitcoin they hold, is a pretty good deal. So don't be afraid to DCA. That being said, just understand there's always the potential that we reject and we break lower, and you need to be ready to take advantage of the major accumulation ranges. That's when I talk about dynamic DCAing, and that's what I kind of preach. You should be targeting your larger buys on lower targets, but looking here though, decent DCA, but ultimately looking for that sub $10 accumulation range for Marathon. A Riot actually came down right to our accumulation range, essentially within, probably 1%, not even. That is pretty much good enough to buy. So a good DCA for Riot. Also holding these lows right through here. Again, if it comes back under $7, all the way down to $5 and then down to $3.50, it's going to be a great opportunity to accumulate Riot. Looking at Clean Spark here, we do see also coming in that cycle 618786 golden zone, coming towards our accumulation zone down here. So if we do see it, and it's in kind of a bear flag structure, we want to see either a breakout, continued higher highs and lows, in which case we could enter on a confirmed kind of trend reversal somewhere up here. Otherwise, we look for it to come into our accumulation zone down here, kind of around $6.50 and cheaper. Could be a good accumulation for Clean Spark. Looking at Cypher here also, so a lot of these you can see they're kind of losing these trend lines. So when we lose these trend lines, it's really going to depend if we can break back up and get above them and hold them as support, or if we're going to reject and continue down. That's why I say wait for the breakout retest before we get in. Otherwise, we wait for the target to our lower levels here. So Cypher, if you get a $2 Cypher, you're going to really want to probably try to accumulate some of them. They do have an investment from SoftBank, which is funding the Stargate AI project for OpenAI. So we did see a lot of hype there, holding these lows over here. So we'll just continue watching this. It's not the end of the world if they lose these upsloping trend lines, because they are kind of the weakest in terms of support and resistance. So yeah, it's not the end of the world, but we want to see them get back above it and hold it as support, give it that strength to continue up. Bit farms kind of coming down to this horizontal support just within it, still in that downtrend price action. Looking at that, a good, within 10% of kind of that first target of $1, and then down to 40 cents. Looking at that accumulation zone for bit farms. Looking at Hive here, we do see they're in their accumulation zone right now. We do need to pay attention to them. We want to watch for that price action. Hopefully we can get back above this, hold this zone as support, and continue up from there. But Hive, also a good DCA or a good potential buy. That being said, you guys know my thoughts. I'm personally sitting on my hands just waiting. I have enough exposure in miners and Bitcoin where I'm comfortable, and I'm just going to hold that. And then if I get some really good buying opportunities, then I'm going to take advantage of them, assuming that the other market conditions support my thesis and we can continue grinding up. If the SPY is going to just keep breaking down, then it's going to drag Bitcoin and crypto down with it. So we'll just continue watching that. We see here we've got this upsloping trend line. My target here for HUT, looking at sub $10 again. Bear flag structure 786, horizontal support. We've got upsloping trend line support, and we've got VRVP point of control. So this is going to be a really good entry in HUT, actually, in my opinion. That $10, there's a lot of support there. I do expect us to get some kind of reaction there, assuming that the market doesn't just dump out and pull all the miners down with it. So looking at Iris Energy now, also coming into this upsloping trend line. We see here, this is why I say, the upsloping trend lines are good to pay attention to. We did deviate below it here, but we were able to get back above and hold it as support for the remainder of that trend. So that's what I'm watching for over here in some of these other names where the trend lines might be at risk. But currently just went to that 618 Fibonacci, bounced a little bit, decent DCA zone between the 618 and the 786, but ultimately targeting that greater accumulation zone of kind of $4.20 or lower, $4.25, something around there. Flipping over to TeraWolf here, we see TeraWolf also in that 618-786 cycle Fibonacci. So again, DCA territory, but accumulation zone, we're looking more down here around under that $2.50 mark, and we see quite a bit of support through here. VRVP point of control, upsloping trend line, horizontal support, and Fibonacci retracement support. Flipping over to Core Scientific, also we see here coming back up into this trend line. So we do see this is where we might have that bearish retest rejection, in which case if we come down, put in a higher low, that might be a good opportunity for an entry in Core Scientific, but we need to ensure that we're getting that higher low supported by our momentum indicators. Quite a bit of selling through here in the miners, stuck under this resistance of the VRVP and this upsloping trend line. So just watching this, want to see that uptrend price action. Something like this would be ideal, where we might be able to break out and then continue up and attack those highs somewhere up here, but we're waiting for the confirmation here. So not entering right here, waiting for the higher low, higher high, confirmed higher low, trend change, backed by our momentum indicators, entering here at actually a better price than currently, and then riding that trend to the upside. Alternatively, we could just reject and go to these lower targets, in which case you might look to start accumulating Core Scientific under $6, something around there. Looking at Bit Digital, kind of also just above this target range here. Sorry, the chart's just taking a little bit to load. Yeah, so we were just grinding up in this parallel channel. We did see that we got we're just under that point of control in terms of the VRVP. A little deviation under the channel, but it looks like it's trying to kind of get back, regain it as support. Decent price action on the lower time frame, but still more work to be done on kind of the daily and weekly. Looking at an accumulation range of of $1.60 and down to about 50 cents for Bit Digital, but it's still not a bad time to DCA. We'll take a cycle Fibonacci here from low to high. So you still see we're right at that 618 coming into the 786, 618 golden zone. So a decent time to DCA. So that's all. I'm not going to cover too much more. I just wanted to cover the miners that I specifically follow in this document here. As always, it's available in the description of the videos. So just going forward, you know, there is some opportunities here potentially. It's going to be really contingent on if the cycle actually continues. So we need some strength in the SPY and to show some strength in Bitcoin, and then give our miners a chance to really regain some of these support levels, and then we can continue up from there. Otherwise, you know, if we get rejected and we continue our downtrend price action, we just look to accumulate at our lower targets, as always, waiting patiently, following the data, and executing when it makes sense. So thank you so much, guys, for watching. If you learned something new, if you like the content, please share, like, subscribe. It all means the world to me, and I'll see you guys in the next one.